Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley about his chart selections. Bill, we've got a few to look at today. Let's start with AIGE.
This is the Energy Basket share, ETF, and it comprises of crude oil, natural gas, unleaded gasoline, and heating oil. And this one really just turned the corner last week, to be absolutely honest. And after a fantastic run, this has faltered, and it was around through the 40 level. The trend line started to break down. Now, the blue vertical line on the chart there suggests the longer-term trend, where it actually started turning up for a buy signal. Now, what I've done here is I've coupled it with a breakout with high volume near the lower levels at around 30 there at the start of the year, and the relative strength against the rest of the market is very strong, and the weekly RSI equally very strong. This is the trigger point for buying it there, really, when that started going above 0.5, and coupled with the multi-frame MACD, which is positive. So all along that way, we have sort of the positive lemons and onions, sort of the new high, the relative strength high, the inverse Fisher of the RSI going through a 0.5, which is good, against the backdrop of an MACD, which is positive. So that's been very good. And then we have a downturn in the market around about the 40 level. And that's, yes, we could have been sharp. One, I suppose, could have been sharper and say, well, doesn't it come down a bit before? Well, it's done that before and continued upwards. It's all about indicators. The whole basis of indicators are its reliability and sensitivity. Those are the two words that are key to actually coming to looking at any charts and assessing whether you should be taking profits or taking any action at all. And those are the two keywords, yeah. Okay,
Bill, well, let's move on to the next one you want to have a look at, which is BGC.
Yeah.
Talk us through this.
Well, this one here is beneficiary of this new prostate drug, which has actually found favour produced by a company called KUKA Biotechnology. And this has gone through trials, phase 3 trials, and actually coming out with some success. And BTG, which market has lots of patents, and it sells these patents on and actually gets reward from these patents as they come good, is benefiting from this prostate drug coming through. So it all along the chart has been looking pretty good since, I suppose you could say, the start of the year, when it started looking like a recovery phase, and it certainly started moving up very strongly in June, when it came out of a trading ban broke out, and its relative strength against the market started looking very strong that period as well. So this one here is coming into phase, looking very strong against the backdrop of good products coming through, and certainly of interest, I think, this one.
All right, Bill. Now we're doing these in alphabetical order, so there's no logic to sector-wise. Okay, Bill. Well, let's move on to the next one you want to have a look at, which is DVY.
Well, this one here is of interest because it's an American high yield fund, and this is one of the things that I think when looking at funds or looking when the market has fallen is to assess how far down. And when will the markets recover? This is one of the problems, or one of the things that it comes to mind, is to say, well, when are things changing here? When are they going to change? And this potentially, this one invests in high yielding. It's an ETF. It invests in high yielding companies, and 2/5 of the funds is outside the financials. So 3/5, about 50%, 60% of the fund is in financials or thereabouts. So it is very, very exciting, potentially for high yield players, and you can see that this one is recovering. But it's an early days yet as to whether this is going to fully recover. But it's a problem as to say, well, is this recovering yet or not? And it's moved from 45 to 50 odd. Its relative strength against the S&P, you can see, is down 10%. Still, it's well underperforming, but is it time to buy now? And with a political overhang of what Obama might do to yields, and the fact there's been rumours that he might actually start putting the tax on yields up, as to whether this fund will continue to behave well. But it's one way that I think one should play the market to win it down, is to look for collectors rather than individuals. if you buy an individual share, you understand what I mean? Yeah. Going for individuals is thinking, well, there could be a problem. We don't know, the banks might pull this, or what might be a problem with anything at all coming through. But with a collective, it won't actually affect the fund because the fund will just move to somewhere else, and its impact on the fund will be less. But this is certainly a very interesting recovery, and from where the vertical blue line comes in there, that's actually where the MACD weekly starts turning lower and hasn't been of interest since 65. There's a question now: is it too early to go in there or not? And again, it's the top of the chart there. That is the sector of financials there. So it's sort of it's still pretty much very hairy in that area. So it's for the brave, perhaps, but very of interest.
Okay, Bill. The next one you want to look at is India. Which index is this? Is this the Sensex?
Yeah, this is the one. That's the Sensex. Yeah, it is. Yeah, that's right. Yeah, and it's come back 30% from the highs. This one's of interest because it has actually started recovering. It was about 6.5% yesterday. On a weekly performance, 12% up. On a monthly performance, it's down 5.9. This is where the trend's been going. And on a 3 month, it's been down 15. And on a 6 month view, it's down 22. And likewise on a yearly view, it's about 22 down. So this one here, I think, if oil energy prices are going to continue to come down, and there might be trend built in here that's sort of coming through, then this one could actually benefit. So it's sort of, we'll be buying the JI, the JP Morgan India fund, which has got about 30% of financials in there. So this would benefit immensely from recovery. So this is the recovery pick I would make of the markets.
Okay, and it's nice always to buy into an index when it isn't near its highs, isn't it?
Well, exactly. This is the best time to do that. I think sort of there's a temptation to buy new highs. That sort of works quite well for individual shares, but collectives, sort of overseas markets and things, I like to try to get in at a low point, and then it could be a longer term investment, could be shorter term, depending on how much recovery there is. This is recovered quite. It's up 7% today. So it is storming away, this one. So I'm expecting recovery here until it doesn't really.
Okay. The next one, PHLX. What's this one? You've got a long-term view on this.
That's the Philadelphia. Yes, this is the Philadelphia Housing Index, and we're actually saying, well, what is going on here? This is actually saying, well, we're back to those sort of levels, and is there support down here? And how would you trade it? And what I've done here is put the weekly ISTR of RSI and the MACD up on top to see whether there's any point as to how we would trade this. And you can see from the period there, from the blue line on the left-hand side, April 2003, you'd be running this one until the MACD turned over, which will be probably the 1 to 4th vertical line down. So you'll be getting out of 250 nearly 2.5 times up. And that's when you probably turn out. That's when you would say, no, I'm not going in anymore. Now, beyond that, and it's rather complex to look at this, but when the RSI starts turning below minus 0.5 and the MACD starts turning down, sort of like 2006, April, May time, and then you go short. And you go short again sometime in 2007, July 2007, and you'd be doing quite well on that.
Yeah.
The question here, again, is it turning now? Those are just using the indicator. I think these indicators are fantastic for this sort of display, actually. There's a bit more to it than this because you need the RSI turning up above 0.5 to go in on the buy, as well as the MACD turning up. It's confirmatory of what's going on here. When you have the RSI coming through 0.5, minus 0.5, and the MACD is positive, you don't actually sell as a trading sell. It's only when you get the two together that you'd actually take action, and you wouldn't buy this one until you got a new high. This is the virtue of having a new high here. It might be what we're doing here is in 2002, October times, when you've had that big spike on the start on the left-hand side, and a bit of consolidation and a flip upwards. This could be happening here. But I'm expecting more consolidation. Well, the real thing is to see how it behaves on a bad month, really. So it's too early to say, but there are certainly glimmers that the housing market may be bottoming. It's a case of are the financials going to bottom first, or the housing market going to do the same? I think the jury's still out there, but there's certainly some glimmers of recovery here. We're witnessing this through the world markets and the UK markets. As we said a couple of weeks ago, I think we said the 250 is well oversold. It's rallied 12% since then. Anyone doing that, anyone taking or listening to the broadcast and actually consulting a professional advisor could have done very well if they'd bought a covered call warrant on the FTSE, on our FTSE 250 there, they'd be about 20% up on that.
Yeah.
If they with the right guidance and advice and the right appropriate risk management and everything. But the divergence here is in place again, like it was on the FTSE 250 we saw last time. The divergence of the light blue line on the top of the indicator there on the MACD. So I think there might be a bounce here. I think we're seeing speculative funds coming from oil, moving away from oil, moving towards financials and housing situations. So it's all a bit of a flux at the moment, but it might be settling down towards looking at stronger financials and weaker commodities. But it's early days yet.
Bill, always a pleasure to talk to you. Bill Rook from Redmayne Bentley. Thank you very much for sharing your
Pleasure, Charles.
with us today.
Chart of the Week with Redmayne Bentley.